any speak of a strong dollar is bullshit, completely and totally bullshit, and that the intention is to destroy the dollar, to lose the reserve status, and to move to a new system. But I don't know about you, I would sleep real good at night knowing I got 10 million of gold under my pillow and a ledger with 10 million in Bitcoin under the other pillow. Could we really be shedding the world reserve currency? And the answer, I believe, is yes, for this reason, right here.
Mr. Andy Shectman, thank you so much for coming and joining us today. For those of you who don't know Andy, he is the co-founder of Miles Franklin. I know your family started the company. You've been doing this a long time in the metals hard asset space, and really one of the most brilliant minds that I have found over my last 15 years of doing all this. So we are honored to have Andy here today. Thank you, sir, for joining us.
That's an amazing introduction. Thank you. I appreciate it. Yeah, it'll be 36 years this February. And it's amazing to think that we started this company before the internet in a tiny little room the size of a closet. And here we are almost 36 years later. It's kind of mind-blowing, actually. But yeah, it's an honor to be here. And these, as the Chinese curse says, may you live in interesting times. Dude, I almost like that, back in '89 when, there was no texting or internet, or you could get away with saying, yeah, I didn't know that you were looking for me. Because there were no cell phones that everyone had on them back then. I mean, there were out there the big ones, and then the flip phones and this and that, but not everyone had one, and it was a simpler time. But certainly lots to talk about, lots of stuff going on, and it's an honor to be here, man. Thanks for having me.
All right, so honestly, I think that the story of our time, I mean, historians 100 years from now are going to look back in awe at just kind of this time that we're in, this monetary transition, et cetera. And it feels like the administration is talking out of two sides of their mouth. Like they are saying, hey, we want the dollar, we want a strong dollar. And then all their actions are to the contrary. And they're trying to weaken the dollar. I know Tom Luongo, I just interviewed him the other day, and he thinks Trump is trying to stick the middle finger to the global world order, and he's got his theories. And I just to layer the part, I just talked to him the other day. I would love for you to unpack this. And I saw your interview with Michelle, I think it was just a few weeks ago. And it was just brilliant. But I would love for you to unpack this order that really is changing in front of our eyes. And it's hard to see because we're living it day to day. So I'd love you to unpack this global reset we're in.
Yeah, man. I think Tom Luongo's take on how the U.S. is pushing back against the aristocrats and the British and the old established hierarchy, I think is fascinating. I did an interview with him a couple months ago, opened my eyes to that. And Larry's one of the smartest guys out there, no question. So you're certainly talking to smart people. I'm honored to even be mentioned in their names. I think that we are in the midst of a new monetary system, and I do believe that any speak of a strong dollar is bullshit, completely and totally bullshit, and that the intention is to destroy the dollar, to lose the reserve status, and to move to a new system that will, at the expense of the dollar, allow us to protect the bond market with the intention of at some point reshoring our manufacturing and growing our way out of a problem that we're pretty much jailed in right now. And so I mean, I know that that's a mouthful. I'll see if I can unpack it for you here. So we can start with the fact that let's talk about the reserve currency. Is it something that we want? There's something called Triffin's dilemma. Triffin's dilemma is a theory that says if you are the world reserve currency, you can never have a positive trade balance. You'll always have an imbalance in trade, because what happens is that if we have to provide dollars to the entire world for them to transact in business on all corners of the globe are using dollars to buy commodities, et cetera, transact business globally, that we cannot provide enough dollars to the world just through trade alone. And so we have to, in essence, export our dollars to the world, which means these countries need to sell their currency, which weakens it, to buy our currency, which strengthens it. And this is the general theme of it, whereby you have a very strong dollar pitted against very weak currencies. And so the idea is, well, hey, we can send our manufacturing to those countries at a fraction of the cost, and they can make these things for us. So what has that done for us? Well, it's given us very cheap goods like Walmart and Target. It's kept our interest rates low because not only are these countries taking our dollars, for the past 50 years, they've been taking any excess and investing it in our treasury market, which is the most stable and secure and liquid on the planet. So they would reinvest in our treasuries, which would keep interest rates low and asset prices high. The exorbitant benefit of being the world reserve for a very long time was low goods that we would buy, high asset prices, low interest rates. So it seems like a good deal until you get into the fiscal irresponsibility of our leaders and in essence, $200 trillion debt. 37 that we know of, right? That's all the stuff that is on the growing indebtedness on the federal government balance sheet. But the 175 or so trillion that isn't talked about enough would be things like Medicare and Medicaid and Social Security and government military pensions. We can talk about the $28 trillion in treasuries that come due by 2028, but we only bring in $15 trillion in tax revenue over those 3 years. We can also add on to it the $3 trillion plus per year in deficit spending. 28 becomes 37 in 3 years with 15 trillion in tax revenue. Numbers don't add up. And when you look at things like military spending, which is discretional, well, how could we ever dream of retaining the premier military superpower, economic superpower of the world when we're, in essence, 200 trillion in debt, when the numbers don't add up, and when things like military are discretional? We have to borrow money not only to pay the interest that is coming due and the bills that are coming due just to keep the lights on, but in order to fund our military, the strongest in the world, we need to borrow from other countries whom may be our adversaries down the road. Things are getting to that late stage game where, hey, maybe things have to change. And this is why you, I believe, have seen Vice President Vance on White House letterhead write about Triffin's dilemma, that maybe it's not such a good deal for the United States anymore. We don't produce anything. 60% of the country doesn't have a college education. AI will kneecap so many white-collar jobs, not to mention some blue-collar. We need to put people back to work. We need to reshore our critical infrastructure manufacturing, which we've outsourced to the world, such as pharmaceuticals and aircraft components and military components and microchips. We're so reliant on the rest of the world. That's a problem. Now, when we were admired by everyone, when we were revered by everyone, when we had a budget surplus, when we weren't fighting in wars all around the world, when we, the previous administration's actions, I would say, were too stupid to be stupid. People are looking, what the hell happened to this country with election interference or the perception of it? Whether or not, I'm not going to comment on my beliefs, but say, look, the world said, hey, they have election interference. They have a two-tier justice system, at least by appearance. Look at how they've gone away from meritocracy to wokeness. Look at the lawlessness in the cities, cops getting beat up in broad daylight in Manhattan. All of this stuff and the immigration, we people look at us around the world and say, well, they're broke, they're insolvent. They go around the world bullying and imposing sanctions, where we can say to Russia, no, we're going to keep your $5 billion in treasury reserves because we don't like what you did. Now, never mind the fact that we invaded Iraq 22 years ago under the guise of weapons of mass destruction. We're sorry we didn't find any. We destroyed the country, toppled the regime, and guess what? We're still there today, 22 years later. Now, let me say this. I am a full-on patriot. I thank God every day I was born in this country, right? I mean, 36 years ago, I started this company with my father, and I'm the least likely person to ever have succeeded the way that I did, and it's because of this great country. But the things that we saw during the previous administration were too stupid to be stupid, and the actions of this administration, I would argue, are calculated but very, very much more difficult to interpret. And I'm going to try and help, at least from my perception, walk through this.
The world is changing. Privacy, sovereignty, and freedom are no longer optional. They are essential. If you are still holding your Bitcoin on an exchange, you are vulnerable to your Bitcoin being frozen or the Bitcoin not even being there. In a world of broken trust, a fallen world, we need to be able to know through code, through math, that we have the keys to our wealth. We don't need to trust some third party. We don't need to trust some government. We don't need to trust some ruler on high that they're going to have our wealth and not censor it from us. Just ask European Union how that's what's going right now. And that's why at Foundation, they're building Bitcoin tools that are open source, privacy first, and actually simple to use. It's the only kind of Bitcoin crypto tools you should be using. The Passport Core is a Bitcoin-only hardware wallet, probably made in the USA. The only one that I know of, fully air-gapped, no Wi-Fi or Bluetooth to compromise your keys, with a large screen, seamless QR workflows, and encrypted micro SD backups. It is here for the average person or the advanced cryptographer as well. Along with your purchase, you get the attachments, the USB-C cord, the iOS and Android attachments, micro SD card, and the USB-C cable. You don't have to go searching around for everything. You also get the free Envoy mobile app as well. You can buy Bitcoin straight into your self-custody. It helps you set up your Passport Core, label and track your coins, manage your keys, and do so much more. Foundation built the core and their company for sovereignty and freedom for all of humanity. You can take back control of your money and your digital life now. Get started today at foundation.xyz/Brandon, foundation.xyz/BRANDON, or check the link in the description.
So we have a problem financially. Now, the U.S. government balance sheet, as an example, has $5 trillion in assets. The balance sheet of the U.S. government, right? Not the country, but the balance sheet has $5 trillion in assets. The largest of which is student debt, about 100 and or about 45% of our balance sheet is student debt. And I mean, that's just insane. That's about, what is it, like $1.5 trillion or whatnot, somewhere in that neighborhood. Anyways, insanity, right? Maybe 1.6 trillion, something like that. Anyways, the next largest asset of the U.S. balance sheet is military, aircraft carriers, bullets, guns, etc. So, you know, these are two things that are, you know, yeah, I guess you'd call them assets if that's what you want to say. And the last is land. So, you know, okay, sure, that's an asset for sure. So we have $5 trillion in assets against nearly $200 trillion in liabilities. A trillion seconds ago was 31,688 years ago. That's 1 trillion seconds ago. You're talking Neanderthals walking the plains of Europe. So the ability to deal with our indebtedness when we have lost all of our manufacturing, we have a dollar that is getting eviscerated in terms of its valuation through inflation. We have a de-dollarization trend across the globe. All of these things are happening, and so changes have to happen. How do you pay off this debt? And one of the things that I've really talked a lot about over the last several years, and you can stop me at any time if you'd like me to comment on any of this, I'm happy to, but it was
Sure.
the accumulation of metals by the world's central banks. And I've been talking about this, you know, ad nauseum since 2020, and it's a trend that we see continuing and continuing and continuing. And I would say the last few years before the Trump administration came in that these countries were now sophisticated, coordinated, motivated, and wealthy, and they knew what we were doing by suppressing all of the world's commodities, and they were standing for delivery on contracts. That was very, very, very unusual. These countries are beating us at our own game. I'm kind of getting ahead of myself, but I want to kind of set the stage. And, you know, when you have a contract, a COMEX contract or an LBMA contract, you can stand for delivery. That is kind of the option. On COMEX, no one ever stood for delivery. My whole career, less than 1% of contracts that would post would stand for delivery. Most were used as a hedge against whether it be metal in the ground if you're a miner or a company like mine. If I have 1 million ounces of silver in my warehouse right here and the price goes down $1, I'm out $1 million. Well, if I short the same thing on COMEX, a covered short, as this goes down 1 million, this goes up 1 million. So I'm market neutral. I don't speculate with my inventory for my business. That's a legitimate use of hedging. And we see the same thing with, you know, farmers and their crops and whatnot. And so it has a legitimate use. Now it's turned into a casino, a speculative casino, but no one ever stood for delivery until now. An example would be, you look at the first 3 days of the August gold contract where over 2,160,000 ounces of contracts posted, and they all stood for delivery, 100% of them. 100% of the over 2,000 contracts that were issued in the first 3 days stood for delivery, a trend that we see accelerating. And I'll get to that in a moment. But anyways, so we have a mathematical problem. We are a country that is running into the mathematics of reality, a growing indebtedness, a dollar that is being inflated, interest rates that have risen, and this administration wants to lower those rates, which is why we got into this problem to begin with. When you mess with interest rates the way that this country did, you create a problem. It's like messing with Mother Nature. The interest rates are supposed to be calculated by the market, not by a bunch of fat bankers who have the ability to say this is the cost of money. And by suppressing interest rates for as long as we have, we've created massive distortions in asset prices and misallocations in resource and capital. Maybe I'll build an extra wing to my building and hire 200 other people who now we have to lay off. Look at the numbers, the unemployment numbers, which are skyrocketing. The revisions we saw last week where there was about 500,000 jobs created in May and June. Oh, sorry about that. It's only about 70,000, not 500. It's somewhere in that neighborhood. They revised them. So you have these issues as things start to play out. And maybe I'll buy a house that I really can't afford, but at 3% mortgage a couple of years ago, hell, that works out great. Now it's at 7%. So, and a 3% mortgage is great until you lose your job. And maybe I'll take on a little bit more debt than I'm comfortable by. Maybe I'll buy the extra beautiful version of the car I want because I can get 72 months, 0% interest. So all of the suppression of interest rates created all of these problems to begin with, in my opinion. And now we have a bigger problem that needs to be resolved, and that is how do we continue to finance our spending habits in the treasury market, which has been weaponized. We sanction Russia, and much of the world says, well, they're no better than we are. Remember what I said about Iraq? In fact, a lot of people would say we're worse. So we don't want your treasuries anymore because if we're on the wrong side of it, well, you'll sanction us too. You'll kick us out of SWIFT. And hell, your dollar's down 11% this year already. So getting a treasury yielding 4%, an 11% drop in the dollar. And let's talk about your CPI. I mean, the CPI that's calculated by the bullshit. I mean, the Bureau of Labor Statistics. And they tell us that inflation is only running at 3%. Really? That's interesting. Well, it excludes food, energy, housing, and taxes. And when things get too expensive, like last April when coffee shot up 85%, they'd replace it with tea, because certainly you wouldn't buy coffee if the price is up 85%, and you'll just switch, and if steak gets too expensive, certainly you'll never eat a steak again, so we'll just substitute with hamburger. They do all of these things to suppress and manipulate the real statistics, whether it be unemployment or inflation. But wait a second, what was the Federal Reserve's dual mandate? Oh, that's right, stable prices and full employment. So let's lie about the unemployment numbers and let's lie about the stable price bullshit. And guess what? We have a new reality. And this is kind of what has happened, and it's caught up with us, right? It's caught up with us because no one wants to hold our treasuries any longer, because not only are they no longer really as stable and liquid as one may think, they're liquid, but are they really stable, right? And we, last year or the year before was the first year in 45 years that gold had less volatility than the 10-year treasury. And with the rates going up and down and manipulated and breaking free because the world's dumping treasuries, so rates are going higher, so the Fed has to come in and buy treasuries, the treasury has to buy back treasuries, all of this to suppress interest rates, because if interest rates move too high, it's the reset. Because of the distortion of asset prices, the suppression for so long, everything got crazy high in an environment where money costs nothing and no lending standards. So you have an inverse correlation between a spike in interest rates and the value of your stock portfolio, the value of your bond portfolio, the value of your real estate market. And what do you think the banks are loaded up with? Treasuries. What happened when rates went above 5% on the 10-year? Boom, Silicon and Signature break. What happens if they really spike? What about the insurance companies? What do they have on their balance sheet? Treasuries. And so it's been an environment where, we've lived a really, really great life for a while here, and we've had an exorbitant privilege that we've screwed up. Our fiscal responsibility and our monetary brain dead management of monetary policy has been a laughingstock for the last several years, as far as I'm concerned. So that kind of lays the framework for where we are right now and what I believe is happening. So with all of that being said, I started doing these videos in 2019, and the first thing that I noticed in 2019 was the BIS reclassifying gold tier 1, and which is a big deal. And the central banks going on a buying spree, which is a very big deal. And accumulating, central banks pulling gold back from the Bank of England and the New York Federal Reserve, a big deal. Not only was it tier 1, not only have they gone on a massive buying spree, they've repatriated their gold from the Bank of England and the New York Fed, which would give direct access to the LBMA and the COMEX. We don't want the convenience, we want our metal. Thank you very much. This is a trend that we have continued to see year over year over year for the last several years. The central banks are buying gold and silver, but mostly gold, like it's going out of style, and doing so very quietly, and using the suppression of the Western paper markets against us. They've become coordinated, sophisticated, motivated, and they know what we're doing. I'll give you an example. The BRICS grain exchange is under development right now, and I've done 5,000 videos on the BRICS. I've talked a lot about the BRICS, and I'll get to in a moment why the poo-pooing and the naysaying of it is a massive mistake. But I've done all these videos on the BRICS and say they know what we're doing. And that's why you're seeing all these countries stand for delivery and continue to repatriate. And so the guy that's behind the BRICS grain exchange was interviewed, and he said, we produce and consume more grain than they do in the West, but we can't control price. That's controlled on COMEX. But with the advent and development of this new grain exchange, well, that's going to change. Well, do you not think they know what we're doing with the precious metals markets and with all of the commodities? Chinese bought the London Metals Exchange, not the precious metals, but the base metals. And they're building warehouses in China they've already built them, to house the metals traded on the London Metals Exchange, all the base metals that you would need to build an infrastructure, from steel and lead and tin and all of these things. They've developed the Chinese Belt Road Initiative, right? And this is 150 plus countries, the largest infrastructure project in human history that is connecting Asia, Africa, South America, and building through a series of roads and bridges and maritime channels. It's just commerce and military patrolling this infrastructure. It's the Panama Canal on steroids, but the common denominator here is all these countries are massively resource rich. And so China comes in and builds the infrastructure and gets a piece of the action. And all of this stuff is connected to resources and the ability to bring resources to market. So when we look at where we're at right now, there is a race for commodities. There is a race to accumulate real tangible things at the expense of U.S. treasuries. We're seeing these countries no longer wish to really hold U.S. treasuries. And since 2014, net, no new central bank buying of U.S. treasuries since 2014. Countries like China have gone from first to third in treasury holdings, slowly selling them off, not too fast, to cut off their nose to spite their face, where they're now supplanted number 2 by the United Kingdom. 2 of the most broke countries in the world buying each other's debt. It's like 2 drunk guys at the end of the night leaning against each other so they don't fall down. That's the US and the UK right now. So all of this stuff doesn't work. And I've been talking about all of this for a very long time, saying they are beating us at our own game, these countries. They understand that we've been suppressing the price. We've been suppressing gold because of a term called Gibson's paradox, which is the inverse relationship between real interest rates and gold. So if you're going for all of these years to suppress interest rates, to create a distortion or an illusion of prosperity in 401ks in your house, you have to step on the canary in the gold mine. That's the price of gold. So all of these central banks in the West would through the commercial banks in their countries, like UBS, like Bank of America, like Goldman, like JB, like Deutsche Bank, they were all collusive. They would sell metal short into the market that they would lease from the central banks at next to nothing, 0.5%. They would short the metal into the market, drive the price down. With the proceeds of those short sales, they would buy U.S. treasuries and capture the spread between the 0.5% lease rate and whatever they were getting on the treasuries. And they're being told to, at the highest level, this was being done specifically to suppress interest rates, to suppress gold, to perpetuate the illusion that fiat paper currencies and cash instruments were the road to prosperity. And it worked for a very long time until where we are now. Things aren't working that way because no one wants our treasuries anymore. Remember, it was the purchase of treasuries that kept interest rates low, asset prices high, etc., allowed us to live this great standard of living. These things are changing. And I believe that someone in the current administration said to Trump, this shit's happening, and if we don't act upon it, we're dead in the water. That these countries together, the BRICS countries, have become coordinated and motivated and sophisticated, and they realize that all of these contracts have a back door. That back door is you can stand for delivery. Now, I used to say less than 1% of COMEX contracts stand for delivery. Remember, over 2 million ounces of gold, 2,160,000 in the first 3 days were posted on the August contract, on the 4th, the 7th, the 8th, and every one of them stood for delivery, 100%. Where are they going? They're leaving COMEX too. This is a big deal. We have a BRICS storage program with 9 facilities around North America. One of them is COMEX, just one, and that's BRICS JFK. The rest aren't in the COMEX ecosystem. Client's got a bunch of 1,000-ounce bars there, says, I want to move to Salt Lake City. Sure, I say. I talked to my Royal Canadian Mint guy. These are all 1,000-ounce bars that he has staged at BRICS JFK. He leaves them there for companies like me. Anyways, guy says, you don't want to do that, Andy. I'm like, why? He's like, once you leave the COMEX ecosystem, that's it. They have to be reassayed to get back in. And I'm like, well, so let me get this straight. It's sitting in BRICS JFK vault. It will be put on a BRICS truck, driven to BRICS Salt Lake City, where it's put into a BRICS vault. No one touches it but BRICS, and it's no longer in the COMEX. That's right. Once it leaves the COMEX ecosystem, if it goes back in, doesn't matter if it's BRICS to BRICS, this is a COMEX facility, JFK. The rest aren't. Once it leaves there, it needs to be drilled and assayed at a considerable expense and time lag, and ain't ever coming back. So when we see all of this metal leaving the exchanges, this has to be understood. This is hugely sophisticated and very hard to do, and big money, right? North of 100 billion worth of gold has come into this country since the beginning of the year, and no one knows squat about it. Who's been buying it? Where's it been going? A lot of it has left the exchange. I mean, bye, gone, goodbye. And it's getting crazier. All right, so why do I think someone within the administration has told them about it? I'm going to try and tie all this together, because since November, we become net importers of gold. More gold has come into this country than at any time since the end of World War II. And the reason it all came in then was that was part of the world reserve currency deal. People would send us their gold. We would say to them, look, you're in Europe. It's been ravaged by 2 world wars. Send us your gold. We'll hold it for you. You can always exchange. You'll get dollars, right? We'll pay you $35 an ounce for your gold. We'll hold it for you. With those $35, you can buy our treasuries and earn a yield on your gold. And anytime that you want your gold back, give us $35, we'll give it back to you. So the dollar was backed by gold. It was as good as gold as far as foreign banks were concerned. And then in 1971, when de Gaulle from France came and sent warships over to New York Harbor filled with dollar bills, saying, you know, you're printing way more dollars for the Vietnam War than you should really have, Fort Knox. So we're gonna stand for delivery, thank you. And we did. We bled out almost half of the gold held at the Treasury to France and Switzerland and other countries who called us on our bluff. And then Nixon closed the gold window in 71. And so, you know, it's a situation where we went back on our promise. Mm-hmm. So the dollar's really been backed by nothing. So in any case, where we are right now, someone said to Trump, I believe, if we don't do this, we're in trouble. So they developed this ruse, if you will, in my opinion, of gold tariffs. And so they start draining all the gold and silver. And all of a sudden you see that we know of over 100 billion come into the country in deliveries, much of it leaving the COMEX market. Where the hell is it going? And the first 5 days of the August contract, we saw roughly 6.5 to 7 billion worth of silver come in, and almost all of it left. Now ask yourself, those of you that have ever held a silver mint box before, which is 500 ounces and 40 pounds, who's taking possession of 7 billion worth of silver? Okay, because that box is, you know, what, $16,000 or $18,000. Who's taking possession of 7 billion worth of silver? Where's it going? How many semi-trailers is that? So, and it's leaving the ecosystems. All this metal's coming in. Much of it, I would argue, that's coming in we don't even know about. It's coming in not through the COMEX, going into private vaults like JP Morgan's vault or, whatever, that we're just not being told about. And maybe it's Secretary Bessent through the Exchange Stabilization Fund under the guise of, or under the purview of national security, so he doesn't have to tell Congress yet. Let's see if I can put all this together right now. So since November, we're net importers. All of this influx. The central banks have been buying nonstop. These coordinated entities through sovereign wealth funds and southern and eastern central banks draining the world's exchanges like London. So much metal has come into the United States from London that they're a T+1 settlement, which means T is trade day. Let's call that Monday, +1 settlement Tuesday. Wednesday, the bars should be moving. They said, sorry, there's just such demand for bars shipping out. We're T+8 weeks. Not enough trucks and manpower, the Bank of England says. So not enough trucks. But this is the institution, let's use silver as an example, that have 155 million ounce float of silver right now. But they're trading upwards ends of 1.9 billion ounces a day in spot contracts. On 155 million ounce float, those are the bars that back the contracts. So what could possibly go wrong there if everyone stands for delivery? Well, we're T+8 weeks, not the T+1 that you're expecting.
Everything you are learning in this episode is completely moot and does not matter. If you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party, this is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. Now that you have the professional team in place, you need the professional tools to store your generational wealth forever on a titanium C plate. Your 12 to 24 words are your generational wealth. That is the key for your Bitcoin, no matter where you are in the universe. Go to Stampseed, code Brandon at checkout for 15% off store-wide. This withstands fire, flood, nuclear fallout. We shot hockey pucks this thing. Don't become a statistic and put your generational wealth in paper. Go to Stampseed now, code Brandon at checkout for 15% store-wide to secure your generational wealth forever.
They've been doing this in the West forever, rehypothecating, trading, and suppressing naked shorts, doing all they can to suppress the price. And it worked when we were the most wealthiest, revered entities in the world. The Bank of England and the New York Federal Reserve, and the trust was there, and the Western rule of law and all of this stuff. And then lo and behold, the West loses its mind and becomes indebted to the nth degree. And the rest of the world says, screw it. We would like to stand for delivery. Now we got a problem. And that's kind of what is happening. And so we look at things that have happened along the way. We look at Secretary of Treasury Scott Bessent, self-proclaimed gold bug, says he wants to preside over a new Bretton Woods or a new monetary system. Bretton Woods was the event in Bretton Woods, New Hampshire, when we took over for the pound sterling after World War II. All the leaders met there and agreed to the dollar being the world reserve, backed by gold at $35 an ounce, et cetera. Bessent says, I want to be part of a new Bretton Woods, and you'll see one during this administration, he says. I hope to see one. He says, I want to remonetize the asset side of the U.S. balance sheet. Well, what assets do we have? Student debt, number 1, military, number 2, land, number 3. What are you going to monetize? Maybe land, you could put, amusement parks and hotels and stuff, but what else? Oh, how about the gold that's still on the U.S. Treasury balance sheet at $42.22 an ounce? That's the price it's at. And I believe they will revalue it. Now, before I go any further, let's just talk about revaluation. First of all, gold is held, and you can't make this shit up, on the U.S. balance sheet in what's called the gold revaluation account. Number 2, when Roosevelt confiscated gold in 1933 at $20 an ounce, he paid everyone $20.67. With eggs, a dozen eggs being a nickel, that was a lot of money. And then he devalued the dollar by 40%, making gold $35 an ounce. So it was a devaluation of the dollar that revalued the price of gold. Nixon did the same thing in 72 and 3. In 71, when the gold window was closed at $35 an ounce, the next year in 72, he revalued gold to 38 by devaluing the dollar. and the following year 73 to 42.22, where it stayed on the books ever since. So I believe they will revalue gold, and I'll get to all of this. I'm going to tie it all together. It's starting to come together. So let's just recap. So we got all this debt. We owe 38 trillion plus another 9 trillion in deficit spending by 2028. So that's 37 trillion. We take in 15 trillion. The world doesn't trust us anymore because we've weaponized the treasury market against Russia and kicked countries like Iran and Russia out of SWIFT. And much of the global South looks at us as being every bit as bad or worse than Russia in things like the Ukraine and Syria and in Iraq in particular, where we're still there 22 years later. And we didn't even find the weapons that we went there to begin with after we destroyed the country. So all of this stuff, and by the way, guess who gets the reconstruction contracts and all that? That'd be BlackRock. And who is the custodian of SLV? Along with JP Morgan, that's BlackRock. And so when you hold down the price of silver to build high-tech weapons, which they do, I'm kind of going astray here, and the military-industrial complex needs silver. There's 500 ounces in every typical cruise missile, between 13 and 14 kilograms in the guidance system of all these cruise missiles, let alone all the high-tech military components and aircrafts and whatnot. This is why they've kept the price of silver cheap, where 8 Western banks hold the largest short position in any commodity ever traded in silver to keep the price low so they can build high-tech weapons, so the military-industrial complex can be enriched by selling that shit all through the world. Look at the contract Trump just, worked out with NATO. Yeah, you're going to buy more weapons from us. Well, who does that enrich? The military-industrial complex, who needs cheap silver to make the weapons to blow up places like the Ukraine, and then who gets the reconstruction projects? That's BlackRock. It's a cycle of craziness. Anyways, so we're at this point where, we're in trouble. We owe a lot of debt. No one wants our treasuries anymore, and so the world is taking all of the physical commodities and rushing to grab them quietly. Shh, don't tell anyone. Don't let the news talk about it. But it's happening if you look. It's everywhere. Okay, so now what? So you get a new administration. I believe they say, here's what's happening, President Trump. You need to do this shit or we're in very big trouble. And he starts doing it. We become net importers very quietly. We say it's about tariffs. It's not about tariffs. So much gold has come in here, it's not even funny. And it's all leaving COMEX. If it was about tariffs, it wouldn't leave COMEX. It would go to the eligible account in tariffs. There's eligible, there's registered. Our Brinks JFK account, all my clients' metals in that account's ineligible. It is eligible to be traded throughout COMEX. Remember what I said? If it leaves and goes to Salt Lake, it's out of COMEX. It's no longer eligible. Now, if I wanted to sell it, let's say Elon Musk says, I'll pay everyone with COMEX bars $100 premium for their silver. I would just move it to registered. And if it's in the registered category, anyone in COMEX can buy it based upon those contracts. So it's leaving. Who's taking it? Where's it all going? Okay. So remember what the BRICS grain exchange guy said. This will change. We will control the price when it's not controlled on COMEX anymore. So there's an awareness. And how do you do that? You drain the world's exchanges by suppressing the paper price in the West, just like the banks are doing. Let's beat them at their own game. Suppress the Western paper price and then go all around the world and buy metal from every corner of the globe that you can think of that doesn't affect the paper price. You see China, the second largest producer of silver in the world, going all around Latin America, and they're the largest producer of gold. They're going directly to Mexico, pulling silver out of the ground and buying it right from the miners before it's even called silver. It's called doré or concentrate. They send it back to China and they refine it there. They pay double what the West will. They're doing the same thing in Peru. They're doing it all around the world, but they produce more than anyone. So why would they need to do that? They're beating us at our own game because they're using the suppression of price and buying stuff that is off the grid, and by disintermediating the market, by going right to the miners and buying it right when they pull it out of the ground, and even their byproduct sludge, and sending it back. That's concentrate. It's like a goo that you put in a jar and then you refine it and you get metal, right? So sending it back to refine it because it's that important. And yet they're the largest producer of gold and the second largest of silver in the world. Price is nothing but a tool of misdirection. The importance of gold and silver to these countries is wickedly off the charts, to where if we're number one in gold and number two in silver, what the hell are we flying around the world for to buy doré and concentrate, pay double what the West will, and sending it all the way back to refine it? Because it means a lot. And why are we striking these deals with 155 countries in the Belt Road to industrialize them, let them pull their resources out, build oil refineries and gold mines and roads and bridges and maritime channels so we can have a peace. Because we see the big picture. We being China, we think in terms of decades. You think in terms of seconds. You're in trouble when this is all said and done, is what they're thinking. And this is the whole BRICS conglomerate that's joining together. We're going to touch on that in a moment. All right, this is all starting to come together now. And so now we're at a point where there's a realization that this is starting to happen, I believe. You have Judy Shelton, who I interviewed on my YouTube channel about 5 months ago. It's still up there, Miles Franklin Media. Judy's a brilliant, brilliant, brilliant woman and may actually be running the Federal Reserve when Powell's tenure is up. She's in the running for it. She was Trump's nominee in 2016 and due to partisan politics wasn't elected. She said to me several things. But she said, Andy, next July 4th, 2026 is a huge day for President Trump, and he'll make a huge deal of it. He's told me this, she said, and that's the 250th anniversary of the country. He will issue gold-backed treasuries at that point because the demand for U.S. treasuries is disappearing, really. So we talked about the fact that gold need to be audited first, hasn't, probably will be. And we also talked about gold revaluation. Judy, I say, gold's in an account called the Gold Revaluation account. Can you believe that? She laughs. Yeah, I can. Do you think it'll be revalued? Yes, I do. So let's talk about that for a minute. Every $4,000 increase in the price of gold would give the Treasury general account $1 trillion free and clear. And it's an accounting gimmick. Basically, the way that it works is, let's say we just mark it to market and put it at $4,000 or it goes up to 4,000. So at 4,000 bucks, the Treasury would get 1 trillion free and clear. How? They would issue new gold certificates to the Federal Reserve. The Federal Reserve, in essence, would then print that money, $1 trillion, and give it to the Treasury. It's devaluing the dollar, and the Treasury gets the money to do whatever they want with the collateral. The gold is held by the Federal Reserve, but they have no claim on it, just the fiat value of it, not the actual gold itself. That belongs to the American people. And so in essence, what they would have just done there is devalue the dollar, give the Treasury $1 trillion, an accounting gimmick, they can start to pay off their debt. Well, what if they revalue it to a much higher level? James Rickards, who you had mentioned earlier, Mike Maloney, he talks about $10,000 gold, and he uses M1, which is how gold used to be backed by the currency, dividing it into the gold supposedly held in 10 grand. Well, that would give the Treasury $2.5 trillion free and clear, and devalue the dollar even more by like 40%. Well, James Rickards says 24,000, and he uses M2, I believe. 24,000, $6 trillion free and clear to the Treasury. Don't sell an ounce of gold. The dollar gets wickedly devalued, massively, which is what Stephen Mirren wants. Stephen Mirren is now the guy that's just taken over for the vacated Federal Reserve spot. Everyone says, oh, it's just a temporary thing. Bullshit it is. He ain't going anywhere. This is the guy that developed the Mar-a-Lago Accord and wants a weak dollar. What does Vance say? Well, maybe being the World Reserve isn't such a good thing because that strong dollar means our manufacturing is decimated. So Mirren wants a weak dollar, right? So, well, that would work. I mean, now you may actually get into universal basic income because it's going to hurt a lot of people. But how else do we, if we don't devalue the dollar and inflate the shit out of it, how do we pay off this debt without defaulting or hyperinflating outright? We can't. It's impossible. So this is what I'm getting at. What I believe we're getting to is a soft default on the dollar to support the bond market. And I will give you my theory on how that happens. And we'll talk a little bit about the BRICS, and I'll take any questions. So in any case, the dollar is going to be printed ad nauseum. They have to destroy the value by devaluing it and by printing. So what if they did what Rickards says they're going to do, and they put it at 24,000 an ounce? 6 trillion free and clear to the Treasury. The dollar gets devalued by, 60%. And what did Judy say? July 4th, they're going to revalue gold. What's been happening since November? Oh, we're net importers of gold, more gold than any time ever. Where's it all going? It's leaving. Who the hell's buying it? Don't know. No one's talking about it. Don't you think it would come out, like who's been standing for delivery for $100 billion in gold, plus a whole lot more that we don't even know about? You got Percent, who's a self-proclaimed gold bug, wants a new Bretton Woods or preside over it, thinks it'll happen during this administration. Says it's going to remonetize the asset side of the balance sheet, but we don't have assets. We have gold. Interesting. Judy says it's going to back it. Trump comes out on Easter Sunday and says the golden art of negotiating. He who has the gold makes rules. Now, what the hell is that all about? All right. So you're starting to put all this together. Here is my theory in a nutshell. They have no choice. Richard Russell, my mentor, used to say the Fed 15 years ago was boxed in. They can inflate or default, period. They will never be able to grow their way out because of Triffin's dilemma. We had already offshored much of our manufacturing. We can't grow our way out. Now AI comes in and they're going to kneecap the shit out of white-collar jobs. 60% of the country doesn't have a college education. How do we grow our way out of this mountain of debt? You don't. You can inflate, you can default. Okay, well, Vance says maybe being the world reserve currency ain't so good, and you see the talk of a weak dollar to bring back manufacturing, but Triffin's dilemma says you can't have a weak dollar if you're the reserve currency. You'll have a strong dollar. All these countries trading with one another in local currencies, that is the whole concept of the BRICS. That's what they're doing right now, and I want to talk about that because that's going to blow your mind, I think, and that's important, and the naysayers will be proven wrong on that. So ultimately, I believe we do not want to be the world reserve currency anymore, period. We don't. We can't. It's run its course, but we still want to support the bond market for a reason. How do you do that? How do you pay off all of this debt when the world's dumping bonds to buy commodities like gold, which is a tier one asset, which has, by the way, doubled the performance of the 10-year treasury over the last 25 years. Let's look at last year. Gold was up $45. The 10-year treasury was up, gold was up 45%. The 10-year treasury was up 4.5%. Okay, 10 times the performance. Okay, how about this year? Halfway through the year, the 10-year treasury would be up 2.25% of its 4.5%, half of it. The dollar's down 11%. You're negative, what, 7.75% real return? Gold's up 40%. Easy one. So when you talk about them shedding treasuries, which have counterparty risk, can be sanctioned, can be inflated, can be confiscated, or gold, which has no counterparty risk and has doubled its performance and is killing it over the last few years, that's an easy one, right? So that's what they've been doing, selling treasuries quietly. China's gone from 1 to 3, et cetera. Saudi Arabia dumping, India dumping, Russia has none. They're all selling and buying commodities. How do we get that demand? Well, I got an idea. Let's talk about stable coins. And all of these stable coins will be backed by short-term treasuries, which will provide a massive boost to borrowing costs on the front end of the curve. I think they'll peg it up to maybe, 4 weeks, maybe 1 year, maybe even 2 years, nothing longer than that. That will run the economy. Besson says, well, we can get $2 trillion a year in stable coins. And you're going to start to see corporations all over the place issue stable coins, not just banks. And all of it will be backed 1-to-1 by U.S. treasuries, or the majority of it into treasuries, to provide this synthetic demand because the organic demand is disappearing. Well, what about the back end of the market? Now, what do you do there? Like, how do you continue to sell long-dated treasuries to finance the government when there's no demand for it? And the dumping of it would push interest rates up. Remember what happens if it gets above 5, boom, everything resets, right? That is the great reset right there. You put interest rates at 20%, like Paul Volcker did, and everything in this entire universe is gone in 10 seconds. All of it. It vaporizes. So what do you do? Well, what did Judy Shelton say? Andy, July 4th, 2026, Trump will back treasuries with gold. Okay, why? Well, let's just pretend first you revalue gold, put it way the hell up there, okay? And now who would that benefit besides the U.S. government? Well, every central bank in the world who's been buying the shit out of it for the last several years. The BIS calls it a tier 1. The central banks start buying the shit out of it and they all repatriate it. Do you not think the BIS said something's coming with gold, guys? Start buying it, bring it home. Do it slowly. Don't freak anyone out. Don't freak the market out. Just start doing it. Central banks have been the biggest buyers of it for the last several years. The public has not a clue, right? Okay, so it benefits the central banks. It benefits the U.S. government. If it were at 24,000, the Treasury gets $6 trillion free and clear, starts working down its debt. The dollar gets wickedly devalued. Maybe you do universal basic income for a year or two for this reason, right here. Trump gets up on stage and says, look, this sucks, you guys. This is just horseshit. It's really bad. But we screwed the pooch. We really screwed up a good thing, and we did so by printing too much money and being greedy. We're going to fix that now. All of our manufacturing has left. We need to bring it home so your children have a future. And it's going to be tough for a while. The government is here to lend a helping hand for those of you who are going to have a hard time. But here's what we're going to do. If they were to peg the back end of the Treasury market, Judy says it will happen July 4th, 2026. They will do so. And these treasuries that they will issue, starting with 50-year duration. Now, forget about the duration, because the rails of the Treasury market are very liquid and they can be sold instantly. And Judy said they will issue stable coins off of the treasuries that are backed by gold as well, which I found interesting, which will be backed by treasuries. More debt issued that's backed by more debt, but all of this will give the treasury funding synthetically, because the world isn't doing it anymore, so we got to figure out a way to do it. So if they did that, let's say 50, 30, 20, and 10-year treasuries redeemable in gold, what that would mean is gold is the inflation hedge. Gold is the interest rate. So instead of having high interest rates, because everyone's dumping them and the rates go higher and you blow up the whole system, it does you no good. How do you reshore manufacturing in an environment where the dollar is strong? Oh, that's right, we're weakening the shit out of it. That's what Mirren wants. It's already down 11%. This would massively devalue it. And how do you bring it back with borrowing costs too high? How about zero coupon bonds? Zero, as Judy says, no interest rate, redeemable in gold, which acts as the inflation hedge. And the more stupid we are with monetary policy and the more irresponsible we are with fiscal policy, the higher the price of gold goes. It is your inflation gauge. So now with 0% interest rates and a very weakened dollar, you bring back your manufacturing. You bring it all back and you say, this is what we're doing. We're going to bring back manufacturing so we can be the engine of ingenuity and of manufacturing like we once were. And we need to do this. It's going to be a little sacrifice. Government's going to be here to give you universal basic income, those of you that need it, until we are able to reshore manufacturing and once again be the engine of growth. The front end of the market is controlled by stablecoins to give them the ability to continue to operate. The back end of the market, you'll have zero borrowing costs, redeemable in gold, bring back manufacturing. And now you have the ability to maybe begin to grow your way out of this problem. When you have inflation, there are really there's not a lot you can do unless hyperinflation, unless you grow your way out of it, or you can default. And so growing has never been an option when we outsourced all our manufacturing. So I believe that is what they want to do. They want to shed the reserve status. They want to eviscerate the value of the dollar. They want to let gold go much higher, tie it to the back end of the treasury market to bring back manufacturing at a 0% borrowing cost with a very weakened dollar so we can sell products to the rest of the world instead of buy products from the rest of the world, so that we can grow our country from an industrial standpoint and give it prestige once again. I think it's a Hail Mary pass, and it's either inflate, default, or soft default on the dollar this way to support the bond market to bring back manufacturing, to grow your way out. It will take some time and there will be some pain, but it's the only way I think you'll ever get it back. Now, one last point about the BRICS that I would like to mention, and that is that, their MBridge program is a big deal. And the MBridge program is a cross-border payment settlement system that was developed by China, Hong Kong, Thailand, and the United Arab Emirates, and the fifth full partner is Saudi Arabia, which is a big deal in and of itself. And this is a cross-border system that is free from SWIFT interference. And these countries will trade their local currencies with one another. This is what we're seeing. And they'll do so in 7 seconds instead of the 3 to 5 days with SWIFT going back and forth between the dollar, and a 98% reduction in fees. And China has just come out and said they have connected 11 Asian countries, ASEAN, these are the countries in Southeast Asia, and 5 Middle Eastern companies. They are fully connected to the MBridge platform. It's now called BRICS Bridge. And that at the same time, these are the countries that have been buying all of the gold, right? And all of these countries in the global south have been buying all the gold. And so you're seeing what they will do is they will trade with one another in local currencies. Well, at the same time, the Shanghai Metals Exchange comes out and says, in an attempt to internationalize the digital yuan, we are now making redeemability in yuan, in gold, at the Shanghai Metals Exchange. So as an example, China can buy oil from Saudi Arabia, pay for it in digital yuan, trade over the M bridge in 7 seconds, 98% reduction in fees, not compatible with the pound, the euro, or the dollar, is not SWIFT compatible. SWIFT has no idea what's going on. They can immediately take those digital yuan and convert it into gold at the Shanghai Metals Exchange, leave it there and buy, if they want, yuan-denominated bonds, or take the gold home. China, the Metals Exchange, Shanghai Metals Exchange, says we are also now building a series of vaults throughout the Belt Road Initiative infrastructure. The next one is in Saudi Arabia. It's under construction now. They just built one in Hong Kong where everything gets delivered. That's not in China. That's not in Shanghai. That's in Hong Kong. And so you can take delivery of it in Hong Kong if you want, or have it shipped out. Any metal that leaves the country has to go through Hong Kong. And so they said, well, the next one is under construction right now in Saudi Arabia, and we will build all these multi-jurisdictional vaults all throughout the Belt Road. So now you have the skeletal system where the settlement, which replaces the treasury, which would be in gold, will be in all of these vaults, and you can trade with one another over your local currencies. What does Vance want? No more trading in dollars. You trade in local currencies. You trade over the bridge technology. Boom, done. No SWIFT interference, and any imbalances you settle in gold through the infrastructure in multi-jurisdictional vaults, including the BRICS vault, or the BRICS Metals Exchange that's being built, the new St. Petersburg Exchange, the Moscow Exchange, the Dubai Exchange, the new one in Singapore, and all of these new exchanges that are popping up that are all going to be connected, which will be the ability to settle imbalances in gold and trade over this technology in without SWIFT interference very, very easily. Well, people would say that the BRICS aren't big enough. They, well, in and of themselves, the BRICS represent over 40% of global GDP. You add into it the Belt Road Initiative. Now, these are countries, 150 of them plus, that are very much connected to the BRICS and China, but that maybe aren't in it. To the Shanghai Cooperation Organization, very much connected to BRICS. Some of the members are in it. It's the largest regional military and financial group in the world. The Eurasian Economic Union, these are the countries that end in Stan, that Russia founded, like Kazakhstan. All of these countries are connected to the BRICS. They're just not in it in so many ways. This is where it gets interesting. Sergei Lavrov, the Russian foreign minister, came out a month and a half ago and said, you know what? We've decided that we are opening up this technology to every country except the West. We're opening, because we're sanctioned by the West, so this is not compatible with the dollar, the pound, or the euro, but we're opening it up. And I interpreted that as that they were going to open it up to the Belt Road. Well, I'll get to that in a second. They are. And so now you open up to 155 countries there, the countries in the Eurasian Economic Union, the countries in the Shanghai Cooperation Organization. You're talking 90% of human population, 3 of the 4 largest nuclear arsenals on the planet, the majority of all the global production of rare earths, 100% of all the refining of rare earths, the manufacturing capability. Vietnam just joined the BRICS. Indonesia has the largest nickel deposit in the world. They're all melding together, and we can now trade with each other outside of SWIFT. They can't fuck with us anymore. They can't sanction us. They can't do anything. And the safety in numbers thing, well, now we're all connecting with one another, and we can trade. And then I see an interview about BRICS Pay. Now, BRICS Pay is the B2B side, the retail component, right? You got BRICS Bridge, which is central bank to central bank, free from SWIFT interference. And then you have BRICS Pay, which is like a credit card or an app on your phone that allows seamless integration of buying things, bank to bank, small regional banks, or consumer to bank, consumer to consumer, consumer to retail. Think of it like Venmo or retail, but it's seamless. And all the BRICS countries, they're in the process right now of rolling it into the Belt Road. 75% of human population on the Belt Road alone, the most resource-rich countries on the planet who are becoming more industrialized. And he said, yeah, BRICS Pay and BRICS Bridge will be connected at some point, but we're all doing the same thing, and that is connecting the world other than the West to a new system. Now, we don't want to be combative. We want to be an alternative, yeah, right? They're setting up the pieces. You put it all together, they have the settlement status, which is like the treasury, but it's now gold, all throughout the infrastructure, so not just one entity holds the gold, like when Venezuela asked the Bank of England, can we have our gold back? No, get lost. So now it will be multi-jurisdictional. and everyone uses their own central bank digital currency to trade with one another, strengthening their own economies, making sure that they're smart with their own monetary affairs, and then any imbalances is settled in gold. Deliverable. None of this the SWIFT can do anything about. So I believe that Trump was told that this is happening. And if you don't get your shit together, help us, that we're doomed as a country. So all this metal starts coming in. You get all of these little clues all over the place. We're going to remonetize the asset side. He who has the gold makes the rules, 50-year treasuries. I'm a gold bug. And you ask yourself, how the hell do you get out of a debt situation like we are in right now? How the hell could you ever get out of this situation without inflating or defaulting? To me, this is the only way, because these countries are moving in this direction where they are finding alternatives to the dollar and the U.S. Treasury, and they are finding safety in numbers through trading across the bridge network in local currencies and settling in gold. And they're opening up to not just the BRICS countries, but all of them. And we have a choice. I think it's either get with it or get rolled by it. And I think that's what we are doing. So I hope I've been able to connect all of this, in somewhat of a coherent manner. A lot of thoughts trying to put it all together. But I will say this, as crazy as it sounds, and I'm not a conceited person, dude. I swear to God, I'm not. And it's very surreal to me. But almost all of the stuff that I've said over the past 5 years, somehow, some way, to some degree has come true. And I'm not a genius. I just take all these pieces and I have the courage or the stupidity to put them together and say it out loud. And a lot of the things that I was saying in 2019 and 20, people said, you're an idiot. And now everyone's saying it. Saudi Arabia and the Belt Road and the BRICS and all of this stuff, no one was talking about but me. There's 5,000 videos out there going back to 2019 to prove it. I am publicly saying they're going to destroy the dollar. And they're going to do it to support the bond market. Now you're hearing people talk about this all of a sudden.
Mm-hmm.
I've said it for 2 months now. And I think it's going to happen. I truly do. I put my money where my mouth is. Gold is not an investment. It is wealth that has outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic. And here we are, full circle, 6,000 years after it was mentioned 400 or 500 times in the Bible, and the biggest money in the world, the most sophisticated, well-informed, well-funded traders on the planet are loading up on gold and silver right now. And that's the central banks and whoever the hell is doing it here at home. And I believe it is the only way that you will ever be able to bring back manufacturing at zero interest is to tie it to the back end of the bond market, like Judy talks about. Use the stable coins to run the front end, synthetic demand, bring back your manufacturing, and then maybe you can reset everything once our manufacturing is back here. Because if we don't, we're dead in the water, period. And it will be a shitty place for our kids and grandkids to live instead of going back to what this country was good at with its back against the wall. And that is making things, building things, having ingenuity, and doing so under a system where you can be proud for a full day's work, instead of all these people that are losing their jobs and we don't have manufacturing. So where are we going to ever grow ourselves out? All we are is AI, it seems, tech, and financial services. So that's my theory, man. It's there is a little bit of nobility in it. There is some pain in it. There are some big changes in it. But I don't see how we can ever get back to what this country is supposed to be without bringing back manufacturing. You can't do that with interest rates where they are and the borrowing costs and the inflated dollar or the overvalued dollar. So, suppress the dollar, keep interest rates low, bring back manufacturing, use the stable coins to run the front end. Maybe you grow your way out. And for our children and our grandchildren, they have a future that, as a dad, you would want,
Yeah.
That's where I drop the mic right there, brother. I rest my case, and I'm happy to take any questions if you got any.
That's incredible. That was an unbelievable dissertation masterclass on what is happening. And again, I've been following you since you really came out publicly, and you are not wrong. What you're saying, the things, like you said, to a degree, all these things in some way, shape, or fashion have happened or are happening. And so I think my one big thing is we have our audience is a lot of freedom-minded based individuals. They're much more probably Bitcoin centric, although there's a lot of people that were gold and silver bugs, stuff like that. And you touched on everything. I mean, I kept crossing things off because the questions I was going to ask you crossed off so many of them on your own with that dissertation. That was incredible. I think the one big thing for me is we talked about stable coins, we talked about Bridge or the BRICS bridge. revaluing. We talked about obviously metals in general, the rare earths, all these things that are going on. Where does, and I know you're a student of Bitcoin over the last few years. So I think as a Bitcoiner, someone who's kind of, I've run this gamut from being very political, like I told you, to being a metals person, being in real estate, raising money, all this stuff, and then moving to Bitcoin and thinking, you know what, this, at least in my eyes, or a lot of Bitcoiners' eyes, this takes away the problems we have of the physicalness, or the assaying, the auditing, and all these different things that. But at the same time, there's all these networks and relationships that exist, and people that have gold, all these massive players around the world that have gold, and you can't discount that. And I think that's where Bitcoiners get caught sometimes in thinking, hey, this is logic and math, it's going to happen overnight, and that ain't going to be the case. And I think that's where I would love for you to square the circle, like you're learning on, because where I'm going with this is why wouldn't these countries like BRICS, what we have, like you talk about Zoltan Pozar all the time, right? We have Bretton Woods 1, 2, 3, we keep having this monetary change, every 25 to 50 years, just on average in humans. But why this neutral, the strongest computer network to ever exist, that's neutral, that no one's permissionless, trustless, no one, there's no auditing, or there's auditing going on, but no one has to do it themselves per se. You run a node or something like that. But why wouldn't China? Why aren't these other countries doing that? Why are they going and trying to build their own system? Is that just because people are always going to want to control these networks, the big guys who control the world today? They're not going to go to this system. So I would love for you to just unpack this for a couple of minutes, and your thoughts on just Bitcoin, the role it plays, and where you kind of see us all heading. And will, politics is downstream from culture. So if the fever pitch is big enough, will it make people, the big guys, do that? Or are we just looking at a world where, hey, we're going to be dealing with this for the end of time. We're going to be dealing with money and fractured money, and just this fight back and forth. So I would love your thought on that, and just kind of how you see all of that.
Well, central banking and decentralized networks don't go. That's kind of like oil and water, I mean, I think that the central banks aren't buying it is interesting, and they are buying gold. It's you can't really hack gold held in a vault. The advent of quantum computing, and there's always pushbacks. Mark Moss is a buddy of mine. I listen to what he says and talks about, the ability for quantum computing to be the Bitcoin network to be quantum computing resistant. You look at the Google Willow chip that can do in 10 minutes what the world's fastest supercomputer does in 10 septillion years. I didn't even know what the hell septillion was. It's like 10 to the 24th power. Yeah, and China has come out supposedly with a new chip even faster than this. And so, I mean, I think there's a lot of it that has to do with the fact that Bitcoin is barely a teenager and gold is 6,000 years old. There's a lot to do with it. I do believe that my biggest mission when it comes to Bitcoin is to convey to people, look, that it's just idiocy that we are not cohesive as a unit, that we are very dismissive of one another, that we are divisive with one another. In fact, I think we see the world very similarly. And if it was a door we are walking in, we walk into the same door for the same reason, that we see the mismanagement of monetary affairs. We see the encroachment of government. We see all of these things that we don't like, but we walk in the door. The gold guy goes to the left to preserve. The Bitcoin guy goes to the right to profit. So, okay, cool. Well, think of it of going to a casino. How many times have you gone to a casino and you're up like $500 right away, and then you leave, you're down a couple hundred? Well, what happened to my winnings? Well, I stayed too long. So instead, go in, make your profit, leave the original up there, and put that profit into gold, and let the original continue to grow. Now your understanding of monetary systems, of monetary history, of economics becomes much better when you understand both sides, I believe. And your argument and your portfolio is much stronger. So I wanted to unite the two communities. Michelle McCory, who works for me now, is going to be spending almost a month in September in the Orient, in Asia, emceeing a couple Bitcoin conferences.
Yeah. Yep.
I'm a precious metals company, and I'm a gold guy, but I understand, I think, like I said to you at the onset, you learn more and more about less and less till you know everything about nothing. You're an idiot. And you never grow if you don't learn the other argument. And I am for bringing the two communities together. I just think that central banks don't have the affinity for it, perhaps, that that the Bitcoin community does. And you can see that they're the ones buying all the gold. Some own some Bitcoin, but I don't think deep down, because it is digital, I think deep down there's the fear that it can be hacked. Maybe that's part of it. I don't know.
Right.
I don't know. I would just simply say that there is room for it. I mean, Senator Lummis from Wyoming is talking about revaluing gold. She said it at the Bitcoin conference in Tennessee. You look at the Bitcoin bill, it talks about revaluing gold, taking some of the proceeds of the revaluation to buy Bitcoin for a strategic account. You know, I mean, so there is relevance to it. I don't know, brother, but if I were going to leave one message, it would be that, you know, let's just stop infighting and say, hey, you know, we're a whole lot better having some of both. You are, and I am personal proof of that. And not only that, your understanding of the world is much deeper, and you'll have some in the digital sphere and some in the analog sphere. And you know, someone once said to me, "What's the difference between Bitcoin and gold?" I said, I was sitting next to my wife. I had to say this for shock value. I said, you can't cover your wife's naked body with Bitcoin, but you can with gold. And so, I mean, that's always a bonus if you own enough of it too, and you got a wife who's game.
Yeah, I love it. What are your thoughts on just like what Michael Saylor is doing? I know this touches all the realms of, hey, we need to sell the gold to buy Bitcoin with it. And in the theory behind this, I think is the game theoretical of, hey, we're going to start devaluing what these other people have around the world to our point. Like we're playing this game theory of we're going to start devaluing what they have by the U.S. Apparently, you know, hey, do we have the most? Do we have any? Like, I obviously, I think we have some. I've seen you on many, you know, like, hey guys, we're not going to tell how much we have. Like, what are we doing here? So like Fort Knox, the gold is there. Again, that is game theory itself. So the thought being, hey, we have the biggest military in the world. So this is not a pretty picture, nor is it what I want, or I'm sure you or anyone, but gold is physical. So I could just sell all my gold theoretically, buy Bitcoin with it, boost the price of Bitcoin, start a game theory play, rush to that. And then, oh, by the way, if I want the gold, I've got the biggest military in the world. What am I going to go use that for? I can go around the world, take everyone's gold. It's like that checkmate chess move. I would just love your thoughts on just kind of some of that.
I mean, I think for a smart guy, that's one of the dumbest fucking things I've ever heard in my life. Like, why would you want to do that? Number one, when the whole world is buying it, and you think just because you have the strongest military, which by the way is funded through discretional borrowing of money. So we're going to ask the rest of the world to buy our treasuries so we can build a military and be the strongest. We don't even supposedly have hypersonic missiles. Maybe we do. I don't think we do. Right. And so to say we have the strongest military and we're going to go take things from countries like China and Russia, I mean, if you want to get into World War III, sure. That's just a guy that's drank his own Kool-Aid to the nth degree. You don't have to. You can revalue the price of gold without having to sell a damn ounce of it. This is why it's stupid, and it's an uninformed conclusion by a dude who's gotten very fortunate and gambled the shit out of his company by hyper leveraging it, and it's paid out. Okay, great. He's been right so far. Look at his past. Always wasn't as good as it was. Go research what he was accused of as a businessman in the past and all that stuff, which I won't even cover, but I'll just simply say he got lucky, and maybe it's more than that. Maybe he's smart and maybe he figured it out. But to say something as naive of that, I think, is just beyond asinine, and instead revalue it and don't sell any of it. And if that's what you're talking about, I mean, look, you're not revaluing gold, you're devaluing the dollar. And if you think that you can just sell all your gold to crush the price, well, that'll just be absorbed. It would be absorbed by the market. And then everyone else has the gold. We have none. And then what? We have Bitcoin. Okay, great. Well, maybe it turns out to be great. Maybe it doesn't. We don't know. But to my point, why not hedge your bet and have both? If that's what you want to do, fine. Revalue the price of gold. Take some of the proceeds. Buy Bitcoin, but you have not sold 1 ounce of gold. It's just revalued and still held there. So for him to say that is stupid, in my opinion. And it's just stupid and naive. And I say that with respect. I got nothing against the guy. I just think it's complete idiocy to say something like that. And when the rest of the world is buying it, and for 6,000 years it's been considered money, and the most well-informed traders in the globe, including the central banks and the biggest money in the world outside the U.S., feels that way. Now, you put the BRICS together and our military is shit compared to a coordinated BRICS military with Russia, and India and China and Iran and all of these countries that have nuclear weapons, not Iran, but 3 of the 4 largest nuclear arsenals on the planet. Well, we're going to go and fight all of them and say, we have the biggest military, give us your gold or whatever you're going to do, we'll take it back. No, we won't. And I think I don't know. I think this is the kind of thought that just separates the two communities and divides them. Instead, it should be, we should have a strategic account that is filled with gold and Bitcoin, and we can be the strongest, most well-balanced portfolio in the world and show people we're serious, instead of saying it has to be all this way, which is, again, just the same shit that's happened in this country for the last several years. Divide, black, white, red, blue, vaccine, no vaccine, all this shit. You like immigration, you don't like immigration. All of this stuff. It's like we're a divided country. We used to be called the United States of America, and we were Americans. We weren't this ethnicity or this religion or this color or this belief. And now, it's gotten to the point where it's gotten better in my family, but there was a time a couple of years ago where my wife would grab me by the neck and say, you say one damn word when we walk into dinner, I'm going to kill you on Thanksgiving dinner. She's like, I'd like to actually sit through the dinner the whole night. Okay, fine, I won't say anything. But the point of it is that, like I said, we must stop being mutually exclusive of ideology. For a country that's supposedly so tolerant of so many things, why is it that we're not tolerant of thought? And to say that it has to be this way and all of it this way is just silly. I think it's a moronic statement from a guy that's very successful. And just shut up and keep doing what you're doing and don't say stupid things like that would be my take.
Yeah, and I really appreciate, like I said, you coming on, Andy, because that's where that's why I have you on this show, because like both sides, they do need to come together, and we've talked about this throughout. I mean, there's more of us than there are the guys controlling things. So let's just say.
Well, let me just say this to you: if I said to you, "Here's 10 million in Bitcoin and 10 million in gold," would your immediate thought be, "I'm gonna sell all the gold and have 20 million in Bitcoin"? Maybe some people would. But I don't know about you. Sure. Right. I would sleep real good at night knowing I got 10 million of gold under my pillow and a ledger with 10 million in gold under the other pillow, or Bitcoin under the other pillow. Right. And come hell or high water, I am going to be okay. And to hedge everything on one side is a mistake. It just is. It's to gamble that way is a mistake. And I think that if history has shown us anything, there are very few things that have stood the test of history. Like I said, 2 world wars, German hyperinflation, the Great Depression, every pandemic, everything. And gold is still being accumulated like it's going off the hook by the most well-informed money in the world, the central banks. To make that statement in the light of that is crazy. And when you look at the BRICS unit settlement token, which Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, has said, in principle, we have agreed to a new settlement token called the BRICS unit, which is 40% gold-backed deliverable upon return. You can see half of the world is telling you what gold means to them. And you look at China, who has made trading in all cryptocurrencies illegal because they have a digital yuan. I mean, there's going to be pushback. There's all of these things. I mean, you by doing something as silly as that, we may play right into the hands of the rest of the world. So I would just simply say, hey, if you want to get more Bitcoin, fine. Devalue the dollar, revalue gold, take some of the proceeds, buy Bitcoin, don't sell your gold. And now you've just become twice as strong. You got old school and new school. You got the new kid on the block and the old kid. And together, they're buddies. They're not beating each other up and fist fighting every time they walk next to each other, because that's just dumb. Let's just be cooperative and allies rather than divisive and foes. And I really mean that. And that is one of the reasons I have Michelle here, because I think our two communities are far more alike than we're not.
Michelle's incredible. Whip smart.
Community is the #1 most important thing in a survival situation. And newsflash, you're human, so you're in a survival situation. October 10th through the 13th is your island retreat. Camp Nakamoto, brought to you by Mass Adoption. I will be speaking there. Nellie Brunel, Mark Moss, Larry Lepard, David Foley, James Lavish, BJ Dichter, Luke Broyles, Michelle Weekly, and many more will be there to have fun. Lots of games, activities, Kettleman's Feast, crab bakes. There's going to be everything you can imagine in this beautiful part of Northern New Hampshire. We look forward to seeing you there for 15% off tickets. Gentile 15, Gentile 15, Gentile 15. There's only a couple dozen remaining out of the 100 plus that were available. So get them now. We look forward to seeing you in October.
The revaluing, like I said, I think that it's just so brilliant. What do you think? And the sailor thing, in all fairness too, a sailor, I think he was saying it in jest. Like, I think it was more like you said, shock value. Like you were just saying about covering someone in gold. I think it was shock value to get people
When
thinking.
I watched it, I thought he was dead ass serious, and I almost threw up when I heard him say that. I mean, I did. I thought, like, come on, man. Like, why would you even say that? To me, it's it's drinking your own Kool-Aid.
Yeah. And hey, he's much smarter than I am. He's an MIT, whatever engineer. I mean, whatever. So like the guy, he's way smarter than I am. He's above my pay grade, but
me too. I'm not discounting that, but that take I thought was stupid.
Yeah. Well, to your point, I mean, I think that being diverse, I know there's like the Jeff Boost of the world who say, hey, every ounce of energy you put into an old system, you be careful, right? So, or any system, right? Not old system, but any system. So just be careful where your energy is. So there's part of an argument of, hey, if this is the network we think it is, and it stays decentralized, to your point, if it stays decentralized and secure, and you put all your energy into it, then you can move the world that way. But like you said, there's only 16 years of history there, and there's 6,000 for gold and silver. So, but this is where the two sides need to come together. In saying all that, though, really quick, the revaluation of gold, because I think it's brilliant to do that, because like you said, you can have your cake and eat it too, and we have the ability to do that. How high could the gold price go? Like, where could you take it to? I know Jim Ricker, Mike says 10, Jim Ricker says 24. I mean, could you theoretically, like, what's the upper bound? Like, what's the limit? Like,
the higher you go, the more you devalue the dollar. And so I don't know. I think there has to be some form of logic behind it, but I mean, it could go as high as you want in theory. And it's a gimmick. It's an accounting gimmick to devalue the dollar, which enables us to bring back manufacturing. It's not as much as revaluing gold as it is devaluing the dollar to bring back manufacturing, and to make gold high enough to peg it to the treasuries to make it redeemable, so you don't have to put any interest rates in the long end, so that you can bring back at zero borrowing costs, build your brand new manufacturing facilities, train all the workers, and off you go as the engine of growth, manufacturing, and ingenuity, like we should be. Instead, we are the brains of the world in many respects, and the leaders, the thought leaders, but because we don't make anything, that's a problem. And, what do you do? Like, I remember during COVID when all of the antibiotics are made in China. Well, oh, really? Well, what happens if there's an epidemic? What do we do? And, the aircraft components and the microchips. Remember, there were no cars. You couldn't get any cars. The cars were done, but they all just need microchips. Really? So you got all these cars that were manufactured just sitting in a lot somewhere, and they can't go anywhere because there's no chips. Well, how stupid is that, right? So I don't know. I think that there's a necessity. The nobility in this idea is that we have to do this. The issue that people need to deal with is, could we really be shedding the world reserve currency? And the answer, I believe, is yes. So who will be the new reserve? Will there be a new reserve? Or are we entering a period of time where it will be local currencies and gold and maybe Bitcoin act as the backing, the treasury side, the backing of everyone's currency, so that I like you, man, I do, but I don't really trust you, brother. So I'll tell you what, I'll trade with you, but I want gold and Bitcoin once I get your currency. Okay, fine, great. That's how you establish trust, right? And that's a trustless system in a system that has lost almost all of its trust.
And that's a return to the free banking era, basically, right? 150 years ago, in essence.
Yeah, absolutely. Yeah. And that also establishes, you better take care of your own house type of thing with your monetary affairs, because no one's going to want to take your currency if you continue to bastardize the dollar or whatever local currency that these countries are trading in. So instead, you have to be prudent, you have to be fiscally responsible, and you have to buy some gold. And maybe it mitigates down the road to gold and Bitcoin. I don't know, but I do think when you talk about what has apparently been agreed upon by the big money, it's gold. And, BIS reclassifying it tier one, all the banks buying it, all the banks repatriating it, the exchanges being bled dry, the massive importing of it, the talk of revaluation, all of these things are connected. And the crumbs in and of themselves are all worthy of talking together. You put it together and you're like, yeah, I can see that, how that would happen. Yeah. And that's how I got to where I am, man. And, I don't know. I would tell you there's a high probability in my mind that something like this rears its head before too long. And if you realize July 4th next year is a big, big, big day, you got less than a year to see if I'm right. So I guess we'll see.
11 months. It's incredible. Well, Mr. Andy Shectman. You did not disappoint. Incredible stuff. Any last
Appreciate
thoughts?
it, brother.
And where do people need to go to find
Yeah,
you?
I'd love to come back on next time with you,
Yeah.
and we can talk about what's going on, current events instead of spending the whole time laying out the framework.
Absolutely.
We've been in business for 36 years. We've done almost 14 billion in sales. We've never had a customer complaint. I don't make it as easy as some of the online companies do for a myriad of reasons. And I have a lot of really good reasons that someday I should discuss it publicly. I always say I'm going to do it, but it's kind of my secret sauce on many levels. But we have a price list that people can ask us for at info@milesfranklin.com. Tell us where you saw us. You saw us on this podcast so that we can know where it's coming from. But we will send you a price list that will be as good or better than anywhere in the country. Now, we don't update it every day. If you find better prices, let us know. Chances are we will match it or beat it. We won't be undersold. Our website does allow small purchases, but specifically for anything over a certain amount, you got to call for pricing. And again, it's for a reason. I'm not just saying this. It really is. I have 75 affiliates. I work with the Sprott brokers in California. I work with so many people around the country. I want them to be able to go as low as they want. If they want to undercut the web price, whatever, go for it. So there are a lot of reasons why I don't post it, but know this, that our prices will be as good or better than anyone. We've never had a customer complaint ever in 36 years this February. Look online, you won't find one. And one of the delineations between my company and others is that if you were like, where do you live? What state are you in?
I'm in Michigan. Yeah.
All right. I used to live in Minnesota for 50 years. Now I'm down in Florida, where we've had an office for 18 years. And I moved during the George Floyd riots down here. But I left my corporate office in Minnesota for one reason. But what I was going to say is, if you bought a McDonald's hamburger here in Boca Raton, Florida, or there in wherever in Michigan you are, they taste the same. You would hope. That's something that's homogenous. But so when you're selling gold, you buy a gold eagle from one company to the next, it's the same. It should be about reputation and price and all that stuff. What separates us is that Minnesota is the only state in America. This is why I left my corporate office up in Minnesota when I moved down here. Even though we've had an office down here for 18 years, I left the corporate in Minnesota because it's the only state in America that regulates a federally non-regulated industry. So we are beholden to the Commissioner of Commerce with annual background checks, all employees and principals like myself, a massive surety bond, and continuing education and compliance that makes almost every company in America boycott Minnesota. They won't do business there because they would have to be, in essence, subservient to the Commissioner of Commerce the way that we are. Even if they're in Michigan selling into Minnesota, they'll shut you down. They'll sue you.
Wow.
So we're held to a much higher standard, and we've never had a complaint. And in a federally non-regulated industry, I could spend 2 episodes nonstop talking about the corruption I've seen in this industry. And I speak out against a lot on other shows, never mentioning the company names, but what their MO is, and talk to FBI whistleblowers and all sorts of stuff because it's bad. So from a standpoint of licensing, bonding, reputation, prices, I don't think you can get a better deal. Now, there are a lot of good companies out there, too. I'm not saying that there aren't good companies. SD Bullion, JM Bullion, APMEX, Money Metals, they're all great. I'll beat their prices or match them. I've been doing it longer than almost all of them combined. And but they're all good, right? And they make it easier than I do. So that's the trade-off. We're licensed and bonded and background checked. And that should stand for something in an industry that, you never realize how important a relationship is or something like this until there's a problem, and that's where we shine. So thanks for letting me say that. Not trying to do a sales pitch. I just want people to know what makes us different, and that really is what makes us different. So info@milesfranklin.com if you just want the price list, or if you have any questions you heard on this show or anything else, let us know. If you want to be contacted, put your phone number down. We will contact you. Check your spam if you don't get it right away. 1 out of 10 gets flagged by our corporate server, gets flagged in spam folders. Check it. We're pretty good at sending it out right away.
We will link to all that. And if anyone can't tell you're honest and authentic over the last hour and a half, then they weren't paying attention. So
thanks, brother.
You're incredible, Andy. I can't wait to have you back maybe in a few months in the winter when things, slow down theoretically, quote unquote, a little bit. So, I still have half the questions I want to get to. We can kind of dive further into stuff. So incredible. Thank you so much, Andy. You are incredible.
Yeah, man, you stay well. Again, thanks for having me on, brother. I really do appreciate it, and I look forward to picking up where we left off.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.